Welcome to AIMS, a globally accredited and recognized online institute for career-oriented education.
Chapter 2. Repeat Sale Agreement or Istijrar. The concept of Istijrar. It is not a mode of finance, rather a sale agreement, and it may be defined as a sale agreement where the buyer purchases goods from time to time in different quantities. Price may be determined in advance with every consignment or after the delivery of all the consignments, and payment is made at the end of the term. Key terms of the contract. The product is supplied on an ongoing basis through an agreed mode of payment. The commodity is delivered in installments over a period of time. Payment may be deferred to a future date. The price may be agreed in advance, or it could be the future average price prevailing in the market. Each time there is no offer or acceptance or bargain, and there is one master agreement where all terms and conditions are finalized. Istijrar Case Study. Alli is a supplier of rice and Bilal is a retailer. On the 1st of January they sign a sale agreement, according to which Alli will supply a total of 10 tons of rice from January till June to Bilal. They agree that payment will be made at the end of the total delivery. Regarding the price, they may agree on a fixed price, for example $1 per kilogram, or they may agree that the price will be agreed in advance with every consignment, or they may also agree that the price will be calculated at the end of the delivery and it will be according to the average price prevailing in the market.
AIMS is a globally recognized and an accredited institution. We offer certifications, diploma, MBA, and PhD programs in Islamic banking and finance through an online and self-paced learning system. For registration and details, please visit www.aims.education.
Types of Istijrar. First type. The price is determined after all transactions of purchase are complete. It is permissible under these conditions. The seller discloses the price of goods at the time of each transaction. The sale becomes valid only when the buyer possesses the goods, and the amount is paid after all transactions have been completed. The following situations may emerge in the first type. The price of the subject matter was unknown, but the contractors agreed on whatever the price shall be. This sale will become valid. A conflict may emerge if the difference in the market and agreed prices are too high. In this condition, the sale will become invalid and the subject matter cannot be utilized until the conflict is resolved. The second type. The price is determined in advance, but the purchase is executed time to time. It is used by Islamic banks for both supplier and customer. Here is its mechanism. The first agreement, between the bank and the supplier. The bank signs an agreement to purchase with the suppliers. The bank agrees to purchase assets from the supplier at market price or at a predetermined discount from the market price. Whenever the bank has a new customer, it will purchase the assets from the suppliers and will sell it to the customer on the basis of murabaha. Second agreement, between the bank and the customer. The bank signs an agreement of sale with the customer. The bank agrees to sell certain assets in a certain quantity at a certain price within a specified time period. The customer then purchases the assets from the banks, in tranches and within the specified time period. This type is referred as Istijrar with pre-agreed sale, because the customer purchases a given amount of assets over a period of time, but the price is always known before the sale.